market. Last week, of course, the naira held steady, ranging between 158 and 159 during the week. This was largely due to month-end sales of FX by international companies to banks in the interbank market. Meanwhile, at the ARDAS, the CBN increased its offer by 33% in the week to $800 million, and now that's from $600 million in the previous week. Now, for an outlook into the new week for the fixed income and money market, I have with me in the studio Tosin Osunkoya. Now, he's the head trading at Rand Merchant Bank. Tosin, it's very good to have you on the show today. So let's get straight into it. Of course, 3 OMO auctions last week. However, those did very little to rein in the excess liquidity in the market. And of course, we have 282 billion in maturities expected this week. So it'd be good to get your expectations for liquidity levels this week.
Thank you, Edidi, for having me. I think it's important to note that moving away from the announcement of the cash reserve, now you're beginning to see that the extreme liquidity is coming back into the market. Notably, CBN had sold about 1.2 trillion in last month. That really hasn't done much in addressing the liquidity in the market. We expect liquidity to continue for the next foreseeable weeks. This week, for instance, we have about 282 billion maturing. That would bring a lot more liquidity into the market.
And how do you think that CBN will react to that liquidity that's coming in?
I think CBN, naturally what they do is to introduce the OMO auctions. I think that monetary tool would, to a large extent, do some, to address the liquidity. But more importantly, I think what would be in the mind of the market right now is the fact that there could be a possible increase in cash reserve in the next MPC, which we expect to happen, I think, back end of November.
Of course. Now let's move on. Of course, still on the focusing on the T-bills market, we saw a lukewarm session on Friday, and although there was some selling pressure, so what are your expectations for yields in the T-bills market?
I think yields will remain, they will moderate at this level. All right, what we're seeing in the market right now is between the levels of 11 and 12%. We expect that to continue. All right, I don't foresee any aggressive, purchase by the traders, because right now they still have what happened in, aftermath of the cash reserve is still very much in their mind. All right, so they expect that a possible increase in cash reserve at the next MPC could trigger yields going up. So they are going to be a bit careful, going into the market to do any aggressive purchase. So what you're going to see is it's going to be a tricky situation. Ideally, you would expect that with the level of liquidity coming to the market, because not only do you have OMO maturities, you also have bond maturities this month. You would expect that there's going to be huge, liquidity glut in the market in the next, few weeks. So if all of that would be a natural drop in yields, but that might not really happen. You might see some moderation between 11 and 12%. You
mentioned bonds there. Of course, last week we saw investors taking profit in the bond market across all maturities, and as a result, we saw yields rising. Do you expect that this will continue in today's session?
I think if you look at it, what actually happened is, for me, I think it's mostly local purchase, all right, possibly coming from the pension fund guys. However, it's important to note that yields have actually come off, particularly yields on the benchmark bonds. They've come up by almost 30 to 40 basis points during the week. That, to me, was very aggressive. So clearly, you would see some profit taking coming up. Those profit taking would continue, all right. However, there's still some bullish sentiments in the market. What people are looking for is a good entry point. If that happens between the range of 12.5 and 12.7, you might see some, aggressive purchase again.
But what bonds would you say would attract the most interest?
Duration and liquidity is very, very important. All right. So if you look at the January 2022s and the June 19s, they are the bride of investors in the market because of, one, the level of liquidity, and of course the coupon, which to me it's not really a value add, but to the pension fund guys, they look at that as well. So you might see those two, being the major focus for the investors. Again, don't forget that those two are actually two of the bonds have been listed in JP Morgan, Emerging Bond Index.
Are you seeing a lot more foreign investor interest in the market?
Yeah, but not as much as what we saw back end of 2012 and the first and second quarter of this year. All right, so that has really waned, if you ask me. All right, but you still see, trickles of investors that are still clearly interested in the Nigerian bond market. However, their concern has always been who is going to take over from Sanusi. All right, what's going to be, the outcome of the election. All right, those are fears that they are nursing right now. So until they begin to see a clear picture where or who the successor would be, the interest is going to be a little bit later.
So you think that that's going to be a significant, a factor that's going to affect the fixed income space?
Absolutely, absolutely. If they see a credible or an announcement of a credible successor to Sanusi, then you might see another influx of, interest into the market. For them right now, what they've adopted is wait and see approach. Okay, let's see who is going to possibly take over from Sanusi. A succession plan is very, very important to them. And the fact that a credible person should be seen to be taking over from him.
Okay, now let's move on to the Naira. We saw the Naira rallying, testing a 4-month high against the US dollar at 158.15. That was, of course, in the back of FX sales. Give us some more detail into what happened and your outlook for the Naira for the week.
I think it's important to, again, appreciate what the CBN had done, all right, regarding the last regulation that came out, all right, in October. That, to me, has actually, yielded some level of fruit in the sense that, Naira's, moderated or stabilized to 158 level and 159. That, again, could be as a result or largely due to, FX sales month-end, which is the typical, usual cycle, because at the end of the month you see the international oil companies selling a lot of dollars to the interbank market. That again had lent some support to the Naira. So if you ask me, I think Naira is going to be a little bit rangy, trading between 158 and 159. All right, we could see it dropping to the low of 158 or a sub 158 if the state-owned corporation, that's NNPC, come into the market. So what you would see if that happens is there will be a convergence between the official window, which is presently trading at 157.37, all right, and the interbank, converging at sub 158. If that happens, what you would see is a resurgence of interest by the corporates and the retail for US dollars.
Okay, and what would you say that CBN would need to do to, to link the parallel market and the official market, the gap there?
It's very interesting. The divergence is a thing of concern for everybody. But if you ask me, I think with time that would narrow. All right. I mean, we all expected that this was going to happen because the fact of the truth is, you reducing the level of the Naira purchase, or sorry, the purchase at the interbank market by the BDC would put a lot of pressure on cash on the streets, and that is what we've seen happening right now. But with time, what you would see is some level of narrowing of the gap. Right now, the gap is about 8 Naira. I mean, 158 to 166. But with time, we see that narrowing.